Why do mortgage rates rise and fall, even when the Fed stands still? This is the question I'm asked daily by my clients, and that's where I'm going to begin the August market update. Here's the key. Mortgage rates don't follow the Fed rate directly. They follow the 10-year Treasury yield. The Fed rate is short-term. It's what banks charge each other overnight, and the Fed sets that directly. The 10-year yield is long-term, and that is driven by the bond market. The 10-year yield moves based on expectations for inflation, forecasts for economic growth, global investor demand for safe assets, and even what investors think the Fed might do next. So while the Fed sets the short-term thermostat, the bond market sets the long-term temperature. And that's the number that drives your mortgage rate. So for my home buyers out there, I'm sure you're seeing in the news a lot of information about expectations for mortgage rates, the Fed rate, unemployment, but it's important to know that the Fed's rate does not always directly impact mortgage rates. While rates are coming down and inventory is growing, now is still a phenomenal time to buy if you're looking for a home. For my home sellers, what I want to reinforce is that listings are growing week over week and month over month. So buyers now have more choice. So as a home seller, really preparing your home for market, working with me to make sure that we have examined and explored every opportunity for you to value up, and that we've really prepared your home from an inspection perspective to be listed is still critical and key. So as you can see in these monthly results, prices, inventory, year-over-year growth, everything is moving in a positive direction. But what we are going to start to see now is some balancing in the market. For buyers, you're going to have a little bit more time and certainly more inventory to choose. For sellers, you need to expect to be on the market a little longer. We have really moved past a cycle of just a weekend of a listing being available for sale, and we are now seeing really on average a couple of weeks. Keep in mind, a couple of weeks to sit on market is still a tremendously shorter amount of time than before, really when the COVID market sort of happened and exploded. So as you're heading into the fall, what I want to just underscore from August's recap is that buyers definitely pay attention to what's happening out there with labor, jobs reports, and certainly really begin to familiarize yourself with that 10-year yield. That's what's going to impact your mortgage rates more than any. But continue to get pre-approved. Again, work and have a consultation so that we can really look at what your upside opportunities are as a buyer, and then really start to examine inventory. There's more of it now, and that's a good thing. You've got more choices and more time to really explore what's out there for sale. And sellers, again, I just want to underscore your home really does need to be prepared. It needs to now stand out. There is more inventory on the market available for buyers, and we want your home to stand out in the right way. So whether you're looking for buying or selling, please know that you can always schedule a consultation. For buyers, I really work with you to explore what your upside method is. And sellers, we are really taking a close look at how we can value up your home and prepare you best for market. Again, stats here for the towns where I really focus. But if you don't see your town here, you can always reach out. I will provide that report. And please know that I list and sell homes all throughout northern New Jersey. So whether you see your town here or not, we're certainly familiar with your area and can help guide you through the buying and selling process. Thanks so much for stopping in this month. Again, please reach out if you have any questions, and I'll see you next month. Take care.